best investors are focused on not losing money. If you ask Warren Buffett, he has this famous 2 rules. Step 1, he said, rule number 1 to investing, don't lose money. Rule number 2, see rule number 1, right? Now that's
Right.
easy to say, but most people are like, what kind of return am I going to get? The way they don't lose money is the second key. When I interviewed all of them, they all agree on one thing. There's only a few things you can manipulate to make more money. You can make better choices, like which stocks or bonds or real estate or whatever to invest in. You can have better timing. And then there's asset allocation. And when I interviewed David Swenson from Yale, he took them from $1 billion in their entire century of development. He grew their annuity to $31 billion during his time there. It's unbelievable what he did. He said, Tony, you're going to be wrong no matter how smart you are about picking the right stock or bond. You're going to be wrong, and you're going to be wrong on timing. The only thing, 95% of your investment returns are based on what he called asset allocation. And they all agree with that. It means if I'm going to invest $1,000, $10,000, $1 million, whatever it is, I need to in advance have a plan of what percentage am I going to put in low risk environments where I'm going to have low risk, but low return, but it's steady. It's like the turtle. And then I'm going to have some that are environments where there's more risk, but there's the potential for upside. And then how I diversify that to protect myself, not all my eggs in one basket, is going to be critical. Most people know that. Well, these guys have developed very specific asset allocations. And one of the things that happened when I went to go write this book, this third book, I decided I was going to look at a different type of investment, which we'll talk about in a minute, which is private equity, private real estate, private credit. Yeah. And when I did that, I interviewed some of the smartest people alive in this area. And I found out by doing my research, KKR, other people show that extremely high net worth people have a completely different asset allocation than the average person. They have 46% of their money, not in stocks, not in bonds, not in REITs, but in private real estate, private credit, and the biggest one is private equity.